Hello guys, welcome back. And the Fed did pause the rates again as expected, widely expected, right? 96% of the market was expecting a pause. And as I've mentioned on Monday, as I mentioned on Tuesday webinar, euro dollar could pull back to the levels of 108.5, 108.85. And that did, all right, so that was the case. We pulled back all the way there, we came back down. Now I'm looking to another up move because the ADP came in much lower than expected. So I think the numbers was around 150 or 170,000 expectation. It came in at 120, 124,000. So much lower than what was actually expected. Not worse than the Microsoft gains, all right, because we have seen Microsoft dumped $300 billion. And that's pretty much due because of the AI sector coming lower. Wouldn't say not care, but not looking much anymore to the AI sector, and therefore Microsoft comes to lower. Look, my personal opinion, I'm not a very good stock CFD or anything like that trader. But definitely Microsoft has been a biggest company in terms of technology, as well as Nvidia, as well as Intel and some other companies. But still, I do believe that we can probably come back, all right? This is just a normal market, unfortunately, happening. All right. But today I will be talking about the Fed, all right? This is the big take of the week. As expected, Europe inflation came up higher as well, all right? And so we do have a bit of to talk today. So stay with me until the end of this video that you will know what is going on the market. Before we start, guys, please thumbs up on this video, subscribe to the channel, and share this content with your friend. All right. I've prepared a few things. All right. I've read the Fed monetary policy comment, and I've watched the Federal Chair Jerome Powell giving his speech, answering some questions of the journalists. And look, guys, it looks to me that we are pretty neutral towards the monetary policy, but with a little finger, a little tip on the hawkish side. Okay. As always, the Fed has been saying the dual mandate, okay? They wants to promote stability and raise and bring the inflation down to the 2%. It is very close, but it's still substantially high for the economy. So we still have they still have a lot to do, all right, in the long run. So the implementation of the monetary policy have done some changes, all right? So the open market operations will be taking undertaking necessary operations to keep the federal funds within the target range. Again, all right, 5.25 to 5.5. The standard overnight repurchase agreement operations will be conducting operations with a minimum bid rate of 5.5% and a aggregate limit of $500 billion. Standing overnight reverse repurchase agreement options will be rate set at 5.3%, a daily per counterparty limit of 160 billion. And the rollover and investment policies managing the reinvestment of principal payments from the Fed's holdings with a specific caps on treasury securities and agency mortgage-backed securities. So pretty much we can see for the next month until next month. So this is August already. Welcome to the new month. Until next month, we can see the target rate between 5.3 to 5.4, no lower than 5.3. All right. A few things that I would like to cite here, okay? The potential impact for the US dollar. I do believe that this can have a negative potential impact on the US dollar, bringing euro dollar higher, USD JPY lower, GBP USD a bit higher as well for pullback again. But not in the long term, okay? In the long term, I do believe that we are playing a concisive role between the Europe ECB and the Fed, as well as the Bank of England, that we're going to be having the decision tonight. So my honest opinions are for this month, we may see a higher euro dollar, all right, reaching 1.10 soon, maybe in the next couple months, in the next couple weeks. But not because such a strong euro, and it's just because of the speech and the data that will be coming out for the US dollar this week. We already had the ADP, and we're going to have the NFP tomorrow night, and I do believe that we can come lower or as expected. All right, so this is pretty much my take. Nothing changed on the Federal Reserve. Have been very neutral, very data dependent as always been, and they need to. All right, they can't come here and say, look, we're going to do this, and that, and then in the end of the month, nothing happens. All right, so the market is still pricing a cut for September. I do think it's doable, a cut for September. All right, not only me, some other analysts as well. But looking at the economy, the rates have been playing a very good role into reducing inflation. Is still a substantially high amount to reduce to get to the target, but this is a long run. It's not a short thing to be doing. So therefore, it's pretty capable to be done a 25 base point cut on September. And when we're most probably going to see how inflation will react on November and December. Preliminarily, I wouldn't expect 2 cuts anymore. I would only expect 1 cut on September, and that would definitely bring US dollar a little bit. The flame of the US dollar would faded off for a while until we get another cut and another ECB press conference. All right, guys, trade safe on tomorrow's NFP. I catch it up with you tomorrow, and if you have any questions, just put down in the comments. And tonight, 7 to 8 p.m., we're going to be having our webinar. So hopefully I could explain a little bit what's going on with the Fed. And again, I'll see you tonight. If you have any questions, you're more than welcome to come, or otherwise just put down in the comments, and I will be definitely reading those questions. All right, guys, thank you so much. Have a good day, good night, good morning, and I catch with you in the next video. Bye-bye.